You are welcome back. Now let's look at this question to demonstrate how you prepare the partnership account on retirement or death of a partner. Let's look at this question. At 31st December 2017, the statement of financial position of A, B, and C, who are equal partners, was as follows. We have assets and the non-current assets. Okay, we have three items there: freehold premises, machinery and tools, furniture and fittings. Of course, these values are the carrying amount. And we have current assets. Okay, addition of current assets and non-current asset gives the total assets and the equity and liabilities and all of that. So let's go straight to the additional information. A, retired at that date, that is 31st December 2017. In order to determine the amount due to him, the following revaluations were made. Freehold premises, 18,000. Machinery and tools, 16,000. Furniture and fittings, 5,100. Okay? I'm sure you understand that. They had to revalue their assets. The value of the goodwill was agreed at 8,000. It was arranged that A should take over the furniture and fittings in part payment of the amounts due to him, the balance to be settled in cash. B and C will increase their capital by paying in 10,000 naira and 6,000 naira respectively. Required. Prepare journal entries for the above entries. B. Prepare the revaluation account and the goodwill account. C. Prepare the capital account. D. Prepare the bank account. And E. Prepare the statement of financial position of the firm after A's retirement. Thank you very much. See you in the next video.